Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Knightscope, covering their Q2 earnings, talking just a tad bit about the upcoming bond or the in-progress bond offering, and just a couple of updates from the company. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Knightscope, so this video should be for your entertainment purposes only. Because I could be wrong about everything I say in this video, you need to do your own research before making any investment decisions. So, Knightscope, I'm quite late on their Q2 earnings. I'll try to be much quicker on their Q3 earnings, but I had multiple requests to talk about Knightscope, and so I'm going to do so. So let's talk about revenue. Hi, thanks. See a couple people on the stream, Transit Stacker and Jay. Great to see you guys. So looking at their revenue, I really only look at their revenue from their autonomous security robots right now, because any comparison of year over year, given the case emergency systems, all the stationary blue light towers and such, is just really hard. There's not a lot of conclusions you can draw, right? You can look at the numbers and you could say, hey, well, that's nice that they made this much in revenue, but it's hard to see really where they're going. I really don't think that's the growth story for the company. So that's why I personally focus on the ASRs. It is good to look at those in tandem, and maybe I'll talk about that in a couple of minutes. But in terms of the actual ASRs, they do split this out. They even split it out from their service revenue in the quarterly report. Not sure where it is. I captured in my spreadsheet here. But for the quarter, they were slightly up quarter over quarter, down year over year. But this is about $1.1 million for the quarter in ASR revenue. And so, as I said, that was up a little bit, so that was good to see. However, if we do look at their margins, I have where'd my chart for that go? So margins are really what I want to see. This is, I think, one of the biggest issues plaguing the company, and so I'm going to get right into that and spend a fair bit of time on this. And specifically right now, I'm talking about their gross margins, their margins on their autonomous security robots. They don't split this out, the cost of service for the ASR specifically. They do split out the cost of service for the service revenue. And this, you can very clearly see they had, $1.8 million of service revenue, $2.6 million of cost of service, cost of that revenue. So this is actually negative gross margins here. Now, not all of that is cash, but really, this is what I look at personally quarter over quarter to see, are they getting better on these margins? Because this is part of my fundamental investment thesis for Knightscope, that over the long term, as they start to scale up, we will see these margins flip from negative to positive and then more and more positive, over time, especially when you exclude things, depreciation and some of these non-cash based expenses. I think this is negative. And, I have some other estimates. You can ignore those, but really just overall, their service margins were negative, roughly negative 45%, gross margins for the quarter. And so that's actually slightly worse than it was the quarter before. So we still haven't yet seen this inflection point where it starts to get more and more positive over time. And really that's because the revenue for ASRs has not grown that quickly. I think this is going to come hand in hand where we see there's a lot of fixed costs in here, where once the revenue starts to take off, the percent of cost from that does not carry forward, right? It goes lower and lower. So that's where they're at. Again, we're still in this wait and see game to some degree. And I think I'm getting a bit ahead of myself, but that's really where their margins were. So not great to see. Hopefully Q3 looks better. Moving on, a couple other interesting bits. This is one thing that I do track each quarter, is how much money did they spend. You can see this in their cash flow statement. How much money they spend purchasing, new materials for new ASRs. And there was this massive dip in Q1 where they spent a very, very small amount. I think I have Q1's report open. You could take just a brief look here in their statement of cash flows, and you can see purchases and related costs for ASRs was $328,000 for the quarter, and that was like their lowest quarter for years. But it's good to see this is back up in Q2, and I say it's good to see. It's not necessarily good to see them spending money, especially when they're not converting. Their margins aren't improving. But it's good to see that they are actually growing. Right? They're buying this so that they can build more robots and so that they can actually grow. And if you look at their ASRs on lease or available for lease, this continues to just go up and up and up every quarter, as you'd expect. And I still think this is not quite. This is lagging revenue at this point. because I think they started doing those. This is an announcement about a year ago. They started doing some of the robots part-time, right? They let you do a part-time shift rather than having to contract it, 24/7. And so that brings in less revenue. And I don't think that they depreciate those at a lower rate, so that actually looks like a higher cost than it probably is, considering if it's not operating at 24 hours a day, it's probably not getting the same wear and tear, and so it'll probably last longer and have lower costs of service there in terms of actual cash. Another comment on the stream. Transient Stacker says we need a video on Tellurian. I will consider that. I might do one just on their cash burn. There's not a whole lot to say. I mean, right now there hasn't been. Sorry, this is a bit of a tangent from Knightscope. So I'll go back to Knightscope in just a moment. But like, there hasn't really been anything. We need to see some movement. I think in the absence of movement, right, they're a natural gas producer that's spending a lot of money that they don't have to develop driftwood, and that's so maybe I'll do a video. And I have a couple thoughts on that and where they're at. But really, there's most of the state of the company is kind of obvious at this point. Like it's there's nothing that I had that's inside knowledge or anything close to it that I think adds a whole lot of value. So anyways, I'm going to focus more on Knightscope for now. Maybe at the end of the stream, after I get through my sort of prepared material, we could talk more, just do some chats. Give me about 5-10 minutes to go through this stuff. So one of the other things that I look at is in addition to what were their sort of finished robots that they have, how much do they have on their balance sheet, I also looked at how much materials and in progress robots that they have, and the value of those. This again is going up, and I made it easier to look at. I have two charts here. I think one of these is the stack chart here, where you can see both of them kind of going up and the total going up quite a bit over time. And then I also have them split out here as their own bars, and you can see clearly they have a lot more in terms of raw materials than the value of the robots in progress. This is backwards. I'm sorry. I can just reverse this right now. This would be this, reverse the axis. There we go. Not sure what happened. I had that reversed before. So you can see that this is also going up over time, and both the red and the blue is trending upwards. They're just building more and more of these. And so, over time, we should start to see the revenue come in from those. If we look at their operating expenses, again, they started cutting earlier this year, and you can see these are actually down for the year. You can see that sales and marketing has been down, quite a bit from a year or two ago when they were really doing a lot of the offerings. They were doing a lot of advertising, to get publicity for the company, to get folks interested in investing, to a large degree. And, that has gone down quite a bit. You can see G&A is now a huge portion of the company. When they did these layoffs and cuts in earlier this year, you can see they actually cut quite a bit from R&D, and they didn't really specify what that was, where specifically they cut in terms of programs, but they actually did cut from R&D, and I think this might just reflect much more of a focus, narrowing the focus to the the K5 and the K1 hemisphere to some degree, and this may have also been some of the post-case acquisition. They may have had some people there that they could have cut, in that sort of technology development department. So that is it. I think over time it'd be nice to see this G&A come down. Just been getting larger and larger and larger. Granted, some of this is not cash, some of this is in stock-based compensation. But again, as a shareholder, both of those are things that I'm not thrilled about. Anyways, so that's where the company is at in terms of operating expenses, and they continue to have operating expenses that are well above their actual revenues, or maybe not the revenues, but their gross profits at least. And so we really need to see a lot of growth in the company before they can start to break even here, as their goal is. Looking just a bit more into their cost of service, there's a couple things you can exclude as cash expenses, right? As part of their cost of service, they do split out how much was stock-based compensation. They split out how much was depreciation and a bit of amortization. A lot of that comes out of the Case acquisition, where they're amortizing what they spent there for certain things. And this orange line, the green line is their total cost of service, but the orange line is really the margin as a percent on that. And you can see they actually got to a positive cost of service margin in Q1. It went back negative in Q2, but there has been this trend, at least sort of, if you I don't really know what to read out of this trend, right? Things did get worse, but now they're kind of maybe getting better. I think in Q3 we'll be able to form a stronger opinion on what this trend looks like. Again, I think as revenues grow, you're really going to see this become a pronounced trend. That's my thesis, at least. Got a question on the stream. Jay asks, are you planning on using any forecasting methods based on quantitative analysis or machine learning to make the best estimate? No, I don't think we have enough data really to do too many, too much complex, using those complex methods, right? It's just, we really need more disclosures from the company. We would need, something else that gives us a lot more information to churn through before we could really do that. I think, I think it's pretty, it's more straightforward in terms of there's just some fixed costs in terms of personnel, in terms of, equipment and manufacturing space that we need to see them kind of grow enough so that those fixed costs start to become a smaller and smaller percent of the overall cost for the service. That's actually, it's like grade 9 math. It's nothing that's too complex really to predict. We just don't have all the information at our fingertips, right? What they report doesn't give us enough insight there. And I would love for them to do more. And I may do a sort of I might do a list of things that I would like to see from the company in terms of transparency, giving more insight into their operations, and try to get that in front of the company at some point. It's been on my list of things to do, but I just haven't done it yet. I think a lot of investors would really appreciate that. There's some things that they could split out and they could report, even on a quarterly basis, right? We don't need to have more than that, but to have more insight into the actual company and their operations, I think would be really, really nice. You know what? Let's not worry about that graph. That's not that big of a deal. So that's most of what I want to talk through in terms of the actual. Thanks, Jay. In terms of the actual numbers from the report. Let me see from my notes here. They did pay off their debt, right? This is a big thing that they happened. Here's their Q3. Let me go up Q3 balance sheet. If you didn't notice this was kind of a big deal. Their cash in Q3, they didn't have that much cash, 2.3 million. You look even at the end of Q2, they had more. A lot of this was just dilution. But the bigger thing is their debt here, right? You can look here in Q1, they had, that's not it, debt obligations, $4 million remaining on their debt. And in the end of Q2, they paid that off. So they were debt free. You just had the value of the equity for the company. So that was a big thing that I feel like it kind of got glossed over in terms of the market. I didn't see any real response to that, and I'm not sure why. At least that's my recollection. Maybe I'm forgetting something, but I don't really remember that being a big deal. Could have been a factor in part of the run-up that they had in prior months, but it certainly wasn't long-lasting. But that to me was a nice thing to see. They are going out for more debt now. I think this is in slightly different terms. And so that would be, it's longer term debt. And so that will be good if they can actually get that. And a couple other very, very notable things they've done, in the past couple months. They did launch the 5th gen K5. And so this was a big deal. They've talked about this for a while and they hadn't gotten to it. They launched it later than I thought they were going to, because they started talking about this, I want to say, in early 2022, where they had the prototypes and were ramping towards this, but they finally got it launched. They said that the first one was the one in New York, and you can just look on their Twitter. You can see they have videos of it operating now, and I think going forward we should expect to see most or all of the new K5s that are deployed to be that. And I think if you look at a bit of their talked about their materials and such. And I think part of the reason why they had a fair bit of this stuff in progress and materials is because they were, retooling, switching over from the 4th gen K5 to the 5th gen K5. So I think that was, factors into this a fair bit. And, as I've said before, the company has said before, the 5th gen K5 will actually take less time to assemble. And so that should reduce the cost of actually producing them. And so we might see some of the cost of service go down there. They also launched the K1 Hemisphere. I think it remains to be seen what the impact is going to be. I don't know how many, what volume this is going to be. Historically, the K5 has been a very large portion of the overall company's revenue and their sales, at least in terms of the ASR side of the business. And the K1 tower, I guess is what they call it now, has existed. They have made some sales, but it's been, I want to say, less than 10% of their overall revenue. And so it's not a main driver of the business. The K1 hemisphere is significantly cheaper, I believe, and can be, mounted in various places. And so it's possible that, could grow to be a larger portion. We also don't know what the margins are going to be. I have to imagine that the margins on those stationary devices are, higher than on the K5. There's just less things that can go bad, and so there's less cost associated with that. I think probably the components also are cheaper in that too. And one other thing that I was thinking about is it seems like a pretty good opportunity for them, when they make these sales of the K1 hemispheres, to also tack on the Knightscope Plus, the monitoring service. And I think that because the all-in cost of having both of those is still, maybe reasonable, maybe cost-effective versus having your own security guards. And that in particular might really help, because I think they already have the staff in place and the software in place in order to provide the Knightscope Plus service. And so I think, if they added on more clients there, that would probably be very, very high margin incremental revenue that they would get. Now, I did want to talk a bit, the last thing here on the topic of Knightscope, and then maybe we could go through some Q&A if folks want to just chat about whatever. I'm happy to do that. So if you want to tee it up on the chat, feel free to add questions on there or comments. But I did want to look a bit at the bond offering. And in particular, there's not a whole lot. It's a 10% bond for, I think, 5 years. Those are the highlights. But one of the things in terms of, for folks who are already invested in the company, what are they using this money for? I thought this was very telling. If you look in here, what are their use of proceeds? And if they get the full $10 million, the vast majority, right? So they take off, $900,000, like 9% for just the cost of doing business, of doing this bond offering, which seems really high to me, but, I don't know. So after that, they're going to get, roughly $9.1 million, and they're spending 7.25 of that on new machines, right? So they're calling this out right up front. They're saying, look, the majority of what we want this $10 million for is to be able to produce, buy materials and produce new machines. And so that, I think, is that's pretty good to see, right? That's fairly bullish, in my opinion, on the company in terms of, like, they think that's what they need money for right now. Is they're like, hey, we just need the money to build new machines. They did put a little bit for corporate purposes, $500,000. That's actually not very much. And I'm not sure there might be some allocation where they have to call certain things, SG&A, or maybe they just put it in there to give themselves a little bit of flexibility. But, they're very, very clearly tilting this towards, hey, we're going to build a lot of machines. This is in comparison to, I went back and compared this against their, the solicitation. This is the Form 253G or something from the SEC that they filed back in 2021, when they were trying to do the public offering, and they said they were trying to raise $40 million at the time. At the time of the $40 million, they would get 36. So again, they get about 90%. They were spending about less than half of that on new machines. They were spending a fair bit of it on development, and even $6 million for SG&A, right? That was almost 20% of it on, I guess 15% on SG&A. And so that's quite a different balance from what they're doing here. So I thought that was interesting to see. Gives you a little bit of foreshadowing in where the company thinks they're going to be going. So that was pretty much most of what I had today to talk through on Knightscope. I know Transient Stacker, you mentioned Tellurian as well, and kind of my thoughts on that are what I said before. I really don't, they're not in a great place. They need to make some deals. They need to make some progress. Until then, they're a gas producer, a small gas producer, like I said, that's spending tons and tons of money that they don't have on trying to build driftwood. And I'm kind of, to some degree, part of the investment thesis was that Tellurian has smart people in management. But by the way, anybody on the chat, feel free to add comments, questions. I'm happy to talk about whatever, Knightscope or Tellurian or anything else. Whatever's on your, whatever you want to talk about. But I think part of my thesis in Tellurian was the management, right? You have Sharif Suki as a former investment banker, and having done this before, you have lots of other, Octavio, who's also been around and done this stuff before, and especially they also hired what's the guy, Simon or Simone, can't remember exactly the name, the new CFO, right? And I have some faith that they were going to put something together and make some deals. They've had a lot of sort of hints suggesting this as well, and nothing's come yet. And so I think, honestly, I didn't think it would get this far without something being done, without seeing some tangible progress. At this point, it's really hard to read. It's really hard to see what's going to happen next. They could start making deals very quickly, and this, they could de-risk it quite a lot. Or, and Martin Houston, right? Exactly. They've got all these people that have been around. They have lots of connections that know how things work. Presumably, like, that was part of my investment thesis, and so I'm really surprised that it has gone on this long without more, right? Like, they certainly it seems right now that they're not in a great place. I could probably go ahead and show. I did do some quick calculations. I can retitle this, I think, after the fact and say it talked about Tellurian as well. Let me pull up. Give me just a moment. So I tried to look and see where they actually landed with their. Sorry. So anybody watching, either live or after the fact, I'm talking about a different company named Tellurian. They're an LNG, hopeful LNG producer, current gas producer, ticker TELL. Sorry, I'm trying to pull this up. So I did do a fair bit of looking at what is our current cash position, because somebody in the Tellurian Discord had asked me about it, and I was looking at the EIA, the prior Henry Hub prices, and I looked at the prior. Let me make this bigger. The prior reports of how much did they actually make, right? So we looked at Q1. I looked at their total revenue, Q2 their total revenue, and I sort of divided that out from their production. There's a BCF produced. I should put that here. And then I said, how much did they actually get per BCF produced in the quarter? In Q1 it was $2.64. In Q2 it was $1.85. I compared that against the actual, spot Henry Hub prices per month in those quarters. In Q1 it was $2.65. So they nailed it in Q1. They were right on the money in terms of them actually realizing the Henry Hub prices. In Q2, it was more like $2.16 for the average, and so they their revenue was quite a bit under what what the reported spot prices were for those months. And again, these come from the energy department, something that EIA.gov, I think, is the website that had that. And then I looked at the EIA's numbers from Q3 to get a picture of what might they have made in Q3. So if we look at that, it was an average of 259 per BCF, and go down here, look at, sorry. So I did kind of a little table here to look at a couple different scenarios, two different parameters on what percent of Henry Hub price do they actually get in terms of revenue, and then how much do they actually produce. I just took their Q1 production, which was 19.3 BCF, their Q2 production, which was 17.2 BCF, and then also just a midpoint and average, just to get a sense. Maybe they'll actually produce more, but I just use this to get a rough baseline, a ballpark number of how much revenue might they have generated in Q3. And this gets me somewhere between, on the very low end, about $37.9 million, and the high end, $49.5 million, with an average there of 43.5 or 43.6. And so that's what I actually used for this little calculation here. So estimated their Q3 revenue at 43 point, let's call it 43.6. I got their operating costs from just from their, I think I carry forward what they did in Q2. And then I also looked at their interest expense. Add those, you subtract both of these off of that number, and you say, hey, well, they actually burned $24.3 million in Q2, given all of those assumptions. So if they burn that money, they started out with 100 and, where is it? Sorry, I'm looking at the wrong company now. Let me get, give me 1 second. Let me get their Q2 report here. And they ended Q2, I want to say, with $104 million. 106. So $106, $107 million. Let's call it 106.7. And 106.7 minus this 24.3 gets into about $82.3 million in cash at the end of Q3, if all they did was their gas operations. Now, they're also spending on Driftwood. I just took forward how much do they spend in the first half of 2023, divided by 2 for a quarterly number. And they spent about 100. This is ballpark, right? Because we don't know how much they're actually going to spend. They don't disclose all of that to my knowledge, but we do know let me find it. This is for the 6 months ended June 30th of 2023. Driftwood project construction costs. They spent $112 million. I sort of rounded that and said, let's call it 120, divide by 2, and then $60 million. So they would have ended the quarter with $22 million in cash if they didn't have this. I think there's a covenant on one of their loans to have a minimum cash balance of $50 million, and so that probably means that they used their at the money offering for at least $30 million in Q3, and so I think that's kind of where I look at it. Or how I'm looking at it right now. Again, if they're spending on Driftwood, they don't have the free cash flow from their gas operations in order to support it right now. So they're burning down cash from that. They're barely break even on their actual operations anyways. I mean, I guess if I'm just looking at Q3, which gas prices are up a bit even in Q4, right? Because it's the winter time. But if you're looking just at Q3, I think they burned money. They didn't even make money on their for the company, excluding costs on Driftwood. Transient Stacker says, what about the leaseback money? I don't think they got the leaseback money. I think that was contingent on some other things. I could be wrong on that, but I don't think that actually closed. It's that. This is where I kind of have to take a step back and say I am actually not a professional, so I'm not 100% sure on that. I'm not even 90% sure on that, but I'm like 70 or 80%, I think. Like I think it's more likely than not that they didn't actually close that and didn't get the money, because I think that would have had to have been another 8K filed where they really disclose that. Although, sometimes these things surprise me. I am not a professional. I do not really know, and so it's possible they got that. If that's the case, they're sitting on tons and tons of cash, but I don't think so, right? If we pull that up, let me find, where was that at? That was an 8K, which was much earlier this year. Oh geez, maybe one of these. I want to say there was some conditions in there. Not that one, not the conditions, but they talked about what it took. Yeah, so the sale leaseback, I want to say it didn't close, right? So this was the big thing that a lot of people were discussing in the Discord, that this would terminate on July 14th, 2023 if they failed to identify the contingent guarantors. And I don't think we ever heard any update on these, right? I unless it's slipping my mind right now, I don't think that happened. And then, so there was no announcement that this was terminated. And I'm not sure if they would have had to file that, but I imagine like that seems like a noteworthy thing. But again, I think this, where's it at? Sorry, I'm trying to read this in real time. I really feel like they weren't getting this until FNTP or something was actually closing. Now I'm second guessing. You got me second guessing myself right now here. Requirement, they have that. The closing. Yeah. So the closing will occur on or the later of, right? And so 91 days after this. And the later of either this thing or the satisfaction of the closing conditions on this, including getting financing commitments for phase 1. So, yeah, I was almost positive, right? This doesn't close until they actually get everything lined up for Driftwood. And so, if they had this requires, right, the on or the later of this or getting financing for phase 1 of Driftwood LNG. If they had financing for phase 1 of Driftwood, they would have made announcements for this. They would have had to, because that would have been even more more 8Ks filed, more material agreements material definitive agreements. That's the actual term. So they don't have this money yet, right? They may have it lined up. I think we can speculate, and again, this is where, not being a professional, I really don't know definitively what this means. I don't think we heard anything around these dates or after that really said, oh yeah, we canceled it, or we are going forward with this. That we kind of have this agreement in place. I think Sharif Suki has mentioned this more than once after this timeline, that they have this sort of sitting there, and that is part of the overall package of the financing they're looking to get for Driftwood LNG Phase 1. But I don't think that, and so that's where I believe, I think that this is still, they've met whatever the conditions they needed to so far, where this is kind of sitting there waiting for them to line up, for the company to line up more financing commitments, and that this is not terminated. This is actually going to happen as long as once other things fall into place. So I think you'd say this is one domino that fell, but there are more that need to fall before the whole thing. I don't know. I don't have a good end to that analogy, but they have to actually get further financing commitments, and then they can actually say that they will act upon this one, right? This will become binding, or that they would actually release the funds, whatever you want to call it. So that, I think, is the case for the leaseback. I assume this is what you were talking about. Let me know if there was something else that you were referring to, but I think this was probably it. Hopefully that answered your question. Yeah, I'm really, a lot of the reasons that made Tellurian, low risk or lower risk, I would say maybe it was always high risk in terms of they didn't have everything lined up, but they had a lot of things that were pushing it away from the uber high risk category. They had the gas operations where they were bringing in some money, and they had the sales and purchase agreements. They had supposedly lots of talks with banks, where it felt like it was just a matter of time until they actually finished the negotiations, got the agreements in place, and moved on. A lot of that has actually unrolled, and I think that has actually raised the risk materially of investing in Tellurian, especially now with gas prices where they are. Right, that was a year ago, or maybe a year and a half ago. I think it was about a year ago. When gas prices were much higher, the risk of investing in Tellurian was looking at forward gas prices was much lower. But now with Henry Hub prices where they are, again, they can't actually finance that much. They can't limp along. They can barely limp along as a company, let alone dump money into Driftwood to continue the development there. So that's, I think the market is responding in kind to that, where it is a very high risk. You even look at their bonds, right? Look at Tel Z, their one of those 2026 bonds. Oh, it doesn't say when they mature, but these have dropped quite a bit. I think that's probably coming around to the fact that they've got those other the convertible notes, where they're going to owe roughly $160 million again in 2024. And I think this is the market saying, all of a sudden, we're not sure they're going to get deals in place. We're not sure that they're going to actually be able to pay those bonds back. And that means these even later bonds are, in a much worse position. Anyway, sorry, I've been talking, just to myself, sort of monologuing for like 5 minutes now. If y'all have any other thoughts or questions, comments in the chat, I'd be happy to keep talking. Otherwise, I think I'm going to end the stream here. Thanks for the questions. Thanks for hopping on. I'm happy to talk more again if you're still there, Jay, or Transient Stacker, about Knightscope or Tellurian or anything else. Give you about 30 seconds. I am going to, just for anybody who's, if you're still watching, or anybody else who's watching this after the fact, I am trying to do regular streams on Sundays, Sunday afternoon-ish time frame. Maybe not always in the afternoon. I'm trying to make Sunday a day where I can have at least a regular stream every week. Hi, Walkaza. Thanks for hopping on the stream. I spent the first 15, 20 minutes or so talking about Knightscope, going over some of the Q2 numbers, a couple other updates, and then had some questions about Tellurian, talked about them for a bit. I'm happy to talk about whatever if you have specific topics on those. Otherwise, I wasn't going to end the stream. But if you're on here, happy to chat about whatever. I love having some back and forth here. So I'll give you another 30 seconds to a minute if you want to. Got any questions or topics you want to talk about? I was just saying, in the meantime, I'm going to try to do these streams every Sunday on a fairly regular basis as best as I can. I can't do this every week, especially with holidays and stuff coming up, but I'm going to try to keep Sundays pretty cordoned off and see if I can at least get this going on a semi-regular basis. Walkaza says stand by. I will stand by. I got some time. It's partially why I picked Sunday afternoon, because I've got some chunks of time where I can chat with y'all. Jay says no thanks. I'm not sure what that's referring to. This is great to see you back. It's great to be back. I really enjoy doing this. Just life gets busy. I got a family and job and all that. So, it's kind of hard sometimes. Transient Stacker says, yeah, thanks for talking about Tell. Absolutely. I'm still holding all my shares in Tellurian. It's... I'll talk just for a second about that. Well, Walkaza, I think, is, maybe typing something up. Tellurian went through this huge thing. I've been holding the stock for quite a while. I think, over time, they're kind of fairly valued based on the market's perception of the risk level, right? And I think you had I'm going to go way back, 2018, seemed like things were going pretty well for the company. That's why you saw them priced at a certain level. COVID hit, you saw a lot of, the Petronet deal kind of expire, unroll, and, stock went down quite a bit. You can look at their chart. I'm talking it through here, but I could probably do it a little bit better. Jay says, I don't have any more questions. Okay, yeah. Well, thanks for hopping on the stream and chatting. Oops, that's not it. That's not where I want to go. I wanted to go here. So look at the 5-year chart. You can see, years ago, they were trading way up here. Because granted, they had a lower share count, but things were also going pretty well for the company. COVID hit, the Petronet deal fell apart, all basically the same time. Those aren't unrelated. And then, the stock cratered. And I held through all of this. I've been holding this whole time. I have added at various points. But I think that the market's reaction, it looks pretty violent here, but it makes sense, right? All of a sudden, the perceived risk level went from, medium risk to very, very high risk and went way, so the stock went way down. And then as they signed some of those sales and purchase agreements, things went back up and there was more optimism. Henry Hub prices went up. So it seemed like, they had these sales and purchase agreements. They had cash coming in the door. That's where the risk went down and you saw the stock really go up. And then, that's sort of deteriorated now. And you're back down to these really low levels because we're kind of back to that same level of risk in the company. They have to some degree de-risked Driftwood itself, but the financing risk has gone up even more because the company itself is bleeding for cash. So, I'm still holding. I still think it's, has this upside potential that's very large, but the risk is also very large at this point. So, yeah. All right. Walkaza says Knightscope is projected roughly $12 million, and there are 107 deployed of the K5s that have been identified, and that is roughly $6.1 million annually alone from the 7,000 plus products deployed. The Knightscope's revenue growth 170% plus in the last 9 months, ending June 2023 so far. Yes. So the one couple things I would say there is, and I don't know, keep typing. I don't know if you're leading to a question there. If you just have some points you wanted me to talk through and give my thoughts on. So I'm just going to do that. And if you have a question, keep typing. I will read it as you talk, as you type there. Yes, so their revenue did go up quite a bit, 170% plus. But I covered this a bit earlier when I was going through things. That is not actually their ASR revenue. A lot of that they acquired, which they increased their share count quite a bit. Maybe that's another metric we could look at. I did have I totally missed this before. I was talking about their sales backlog. I had that on my list and I failed. That's my bad. The backlog at the, they stopped reporting this in their report. And some other filing, they did have their backlog. I think it may have been when they started doing filings for the bonds that I wrote down here in my spreadsheet. As of the end of July, it was $2.1 million worth of ASR backlog. They also had the backlog for case emergency systems. But their shares outstanding has gone up quite a bit over time. And this is, this graph here. Maybe I could zoom in a bit. Kind of some data points here where for quite a while, their shares outstanding were of Class A shares, right, was roughly 25 million shares or so. And that's actually ballooned quite a bit to where I think the most recent value that I wrote down was in August, where they now had 67 million Class A shares outstanding. And again, they also have a couple other classes of shares. They have the Series S shares that are outstanding, and those can be converted into Class A's. They also have, and I don't remember if I'm including the Class B's here just as Class A's or not, because they're converted on a one-to-one basis. We can take a look. Let me go back here, look at their most recent. I don't know if it's in this most recent 25. Let me close some of these tabs so I can see what I'm doing here. Let me see if they have their shares outstanding. No, they don't go through. Oh, here they have all of these. So, yeah, that's not helpful. If we look at their most recent 10Q, the Q2 report, we can see that's where I got this number. On August 2nd, there were 67.3 million shares of Class A common stock outstanding. So if we actually look at Class B common stock, we can see at the end of the quarter they also had, where is this at? 10. Which one are we looking? Yeah, this is June 30th is first. So 10.3 million shares of the Class Bs, and that hasn't changed too much over time. So we're looking at 67 point something, 67.3 million shares of Class A's at about 10 and change for the Class B's that are convertible, and that's let's just round it off, right? You're talking closer to 80 million shares outstanding. And so I think it's useful to look at that to put their revenue in context, right? When they're acquiring to get revenue and then they're diluting to fund that acquisition, which is effectively what ended up happening. They did do a debt deal at first, but then they did all that dilution in order to pay off the debt, and so the net effect was them, increasing their share count in order to get all of that revenue from Case. Now, I think there are some redeeming aspects to that. I think that was actually, I still view that as a positive move for them, in particular because I think they got some stable cash flows from that, and also just the massive customer list that they can cross sell to. I think over time that's going to end up being a fantastic acquisition, but it's going to take some time. But in terms of their revenue growth, the revenue per share, right? Their revenue may have gone up by, let's see, what do they do in for 2022? I don't have it off the top of my head. I'm thinking just real quick. We find. I'm sorry, this is taking so long. Almost there. Let me find statements of operations. There we go. Statements of operations. So in 2022, right, they did 5.1 service revenue, $5.1 million of service revenue, 5.6 total, because this included a partial quarter, I think, of Case. And in 2023, they're going to do, what did they do in H1? Sorry, let me get my numbers right, so I don't lie to you. So in H1, they did 6.4, right? So in the first half of 2023, they already did more revenue than they did in all of 2022. A large part of that is because of Case. You can see even just their product revenue was 2.9. But they let's say tripled their share count. So maybe the revenue per share was was even down a bit from this. And I think that that's consistent with what I said, where if you do look at their, let me open it back up. I can get it, you know, their, that's not the right, their ASR revenue has not grown by that much. So sorry, you've been talking. Let me see what you said. Knightscope's target price raised to now $3.83 from Fintel, by Fintel from $3.75 by Edwu CFA. Yeah, I have. I'll be honest and say I don't always have a very high opinion of financial analysts, which might be ironic given my my hobby. But I think a lot of them go in volume. I very rarely read an analyst report, which granted I don't get my hands on that many because a lot of them cost money. I very rarely get my hands on an analyst report where I really read it and think that they have a deep understanding of the company they're analyzing. Lots of times it seems like they have a shallow understanding, and they'll make projections that are sometimes nonsensical in one direction or the other. So I'm not saying that the person's wrong, but I have read that one. That's the Ascendient Capital one that was given publicity by the company. I think it's got some good parts. It's got some bad parts. Maybe I could do an entirely separate stream, sort of walking through that and giving my thoughts on what they said. That might actually be a useful video for folks. Yeah, but I think there's I'll just say I take everything an analyst says with a grain of salt, long or short. Walkaza also says there are 13 robotics companies that are accounted for so far. Most are in Southeast Asia and will not be entertained in the U.S., and that includes not making U.S. government approval. Yes, so I actually think that's a big deal, which is part of one of my absolute biggest pieces of my investment thesis in Knightscope is the market, I think, is very large, and I think there are very few players. I also think it is, while it's not that technically challenging, it's also not such a lucrative market that's going to, grow so fast that you're going to have huge players that want to invest the money in it. I think it does take some time and effort to convince people that you have a good product, and to go through all the nuts and bolts stuff that you would need, to have an app, to have the web interface, to have all the functionality in there, to be able to make the robots reliable, right? I mean, I'm a software engineer. A lot of the work that you do as a software engineer sometimes is not necessarily building shiny things, but it's in building them the right way so that your software can be reliable. And that's, kind of sometimes the difference between a professional and an amateur. And I think that might be also in some of these cases the difference between what it would take a company to build a prototype security robot versus what it would take to have an enterprise offering for companies to actually use. Well, Costa says in the U.S., the worst one is Cobalt Robotics. Revenue low, copycat, low employee numbers, and it looks like office furniture that can break. And the second worst is S&P Robotics, all private except Knightscope. Yeah, I took a look over the competition years ago. To be honest, I haven't looked them over recently. I had a brief chat. So I went to the Robot Roadshow. I got to talk to Stacey Dean Stevens. I can't recall what his full name is, or what. Don't know what he prefers to go by, but I got to talk to him for a couple minutes actually. And this is one of the things that I did mention, or I did ask him about, was, how often do you go head to head with other companies? How often are you losing sales? And he, I'm not going to say what he said word for word, but I got the impression that they don't have a lot of head to head competition right now. And they get a lot more, effectively they have, I'm just going to make up a statement. It's not really a quantitative thing, but, they have 10x the amount of competition just from, security guards themselves, from humans, not from other robotics companies, and I think you see that where you're looking at the other companies. They are not necessarily whether they're private or not private, but they're all still small, right? And the penetration of robots in the market of, security guarding, if you want to call it that, is very low, right? We would say probably less than 1%. There are probably 100 times as many human security guards as there are robots out there, maybe 1,000 times more. And, I think that's when you're that low in terms of market penetration, I don't think you're going to see companies going head to head or taking business from one another. Not very much, at least. Yeah. All right. Wow. This was 50 minutes, almost coming up on an hour. I probably should go fairly soon. Gotta go make supper. Let's see. Walkaza also says sometime this November, the automated gunshot detection system will be rolled out by Knightscope, and that will be a need given recent shootings in the news. I agree. I think that's definitely a positive that they can offer. You still think something that could have an impact and something that might help, as you say, really drive sales. Sorry. Oh, don't say sorry. You're fine. This is great. I wish I had even more time. Maybe, I don't know if you'd be open to it. Maybe sometime we could figure out how to, you can set it up so other people can kind of call in to some degree. I don't know if you'd be open to that. Then, maybe we could have a little more back and forth. I'm trying my best to respond to what you're saying there, but it would be, if we were just on like I say, on I guess a Zoom call or some other way to get it on there, that would be, that might even be easier here. But clearly you got a lot to say. I mean, I think that those are quite varied points. I feel like I even missed some of the stuff that you said that I didn't respond to very well. Yeah, you're talking about 7,000 plus products deployed. The one thing I would say there is, oh, thanks. I think those are reactions. I'm not used to seeing that on here. It's a new feature. That's pretty cool. Just the one last thing, because I think I talked through most of it, but I know they do talk about having 7,000 plus products deployed. A lot of those are, the vast majority of those, probably at least 6,800 of those 7,000 plus are the legacy products you'd say they have from Case, the call boxes and blue light towers and such. And in terms of the business driver, I really don't think those are going to be, they're just not going to be the drivers of growth that you could potentially have with the security robots. And, really that comes back to what I was talking about just a couple of minutes ago in terms of the market and the current penetration. Right? I think the penetration for security robots is very, very low. I think most people who want the call box and the blue light towers, a lot of them already have it. This is not new technology. Case was not, the only company that does this. I'm not even sure that they were the leading company. I frankly didn't do a whole lot of research into, competitive analysis for them, but yeah, I see more of the reactions or more the little emojis. That's cool. That's really cool. Anyways, all right, I am going to hop off. I'm going to hop off. Thank you for being on the stream, Walkaza. Thank you, Jay and Transient Stacker, and anybody else is out there that didn't comment. I still can't figure out if I can see how many people are actually on the streams. I'll get better at this sometime. But yeah, thank you very much for tuning in. Like I say, I'm going to try to do regular streams on Sunday, roughly afternoon in Eastern US time, sometime around when I did it today. I can't guarantee it, but that's going to be my target, is to do a stream every week. Again, things might be a little off around the holidays, when we have in the US Thanksgiving and Christmas. But on normal weeks, I'm going to try to do this on Sundays. So, all right. Thank you very much, everyone, for watching. I enjoyed it. Hope you enjoyed it. Have a good one.